All right, today we're jumping into a huge, and I mean huge, call from one of Wall Street's sharpest minds, Tom Lee, over at Fundstrat. He's making a pretty bold case for what he calls the Ethereum Supercycle, and we're going to deconstruct exactly what that means and why he's so confident. And listen, this isn't just some prediction for a short-term price bump. No, what we're talking about here is an argument for a massive structural shift in the market. Lee is essentially saying the foundation is being laid for a multi-year run that could completely change the game, even if it's a wild ride to get there.
So, that leads to the obvious question, right? Why? What's the logic here? What makes this moment any different from all the others? Well, according to the analysis we're digging into, it all boils down to a perfect storm of powerful forces that are all coming together at the exact same time.
Yeah, see, this whole thesis isn't just built on one single thing. It's about the convergence, this powerful collision of two very different, very big catalysts. And the argument is that they've just aligned perfectly to light the fuse on this whole thing. You can really break it down into two main parts. On one hand, you've got this fundamental, game-changing leap in the technology itself. And on the other, you've got this massive financial tailwind coming from the wider economy. Let's start with the tech side first. So the first piece of the puzzle is a huge network upgrade that the source is calling the Fusaka upgrade. Now, this is not a minor tweak. The best way to picture it is that they've literally just added brand new data superhighways onto the Ethereum network. And these aren't for regular traffic. They're built specifically to handle gigantic amounts of information.
And why does that matter? Well, it has a direct real-world consequence. By opening up what's called blob capacity, which is just a fancy way of saying they created a ton more space for data, the network can now process huge batches of information for way less money. We're talking about transaction fees on these connected networks getting slashed down to literal pennies. Everything gets faster and a whole lot cheaper.
Okay, so here's the kicker. This technological leap is what finally makes the dream practical. What dream? The dream of moving trillions of dollars of real-world assets, stocks, bonds, maybe even a piece of a skyscraper, onto the blockchain. But a tech revolution also needs money to fuel it. And that brings us to the second catalyst.
And this is where that big financial tailwind comes into play. The Federal Reserve, as you've probably heard, has been cutting interest rates. When that happens, it's like opening the floodgates. It pumps a ton of cash back into the financial system, making money cheaper and a lot easier for people to invest in things.
And this is really the core of Tom Lee's whole formula. It's not one or the other, it's the combination that's so incredibly powerful. You have this breakthrough tech from the Fusaka upgrade creating more real-world use cases, and at the same time, you have the Fed cuts creating more investment money looking for a home. Put those two together, that's pure rocket fuel for the entire ecosystem.
Okay, but there's a third piece to this. Let's talk about the corporate angle, because Tom Lee isn't just watching from the sidelines. He's the chairman of a company called BitMine, and they are putting their money where their mouth is, going all in with this aggressive, relentless buying strategy. I mean, talk about conviction. The source is reporting that just hours ago, with the market looking choppy and uncertain, BitMine went out and just scooped up another 13,412 Ethereum. That is not a small, cautious purchase. And to give you some scale here, that one single buy was worth over $40 million US. Think about that. When a publicly traded company makes a move that big, it's sending a very loud, very clear message. They believe the current price is an absolute steal.
But that $40 million buy, it's really just the latest drop in what's becoming a pretty massive ocean. Right now, BitMain's total treasury is holding almost 4 million ETH. They are basically acting like a corporate black hole, just sucking up a huge chunk of the available supply.
And they're not hiding it. Their public mission is something they call the alchemy of 5%. It's simple. Their goal is to own 5% of all Ethereum that will ever exist. And as you can see, they're already holding over 3%, so they're well on their way. This kind of hoarding just tightens the supply, which, as you know, can have a really explosive effect on the price.
The source makes a great comparison here. The best way to really get what BitMine is doing is to think about MicroStrategy's relationship with Bitcoin. MicroStrategy became this kind of corporate proxy for Bitcoin investment, while BitMine is aiming to be the exact same thing, but for Ethereum. It's a way for big money to get leveraged exposure to the asset.
So you've got this amazing tech upgrade, you've got a friendly economic environment, and you've got this massive corporate whale just constantly buying. So where does Tom Lee think the price is actually going? Well, let's just say he's not being shy about his targets. He's actually laid out a multi-stage roadmap.
He sees a potential move up to $7,000 by early next year. From there, pushing toward a $9,000 to $12,000 range by the end of 2026. But the big one, the peak of this whole supercycle, he's thrown out numbers as high as $60,000, and maybe even higher than that.
Now, I know what you're thinking. Those numbers sound absolutely insane. So let's pull back for a second and look at the whole picture. Let's check out the actual on-chain data that's either supporting or refuting this thesis, and let's also talk about the very real risk of volatility.
Here's what's so interesting. Even with the price going sideways lately, the network's underlying health, its fundamentals, look rock solid. First off, it still completely dominates decentralized finance, with over 60% of all the money in that space locked up on Ethereum. Second, staking, which is where people lock up their ETH to secure the network, is at an all-time high. That shows huge long-term belief. And maybe most important of all, more ETH is now being burned than is being created, making it a deflationary asset, what people have started calling ultrasound money.
But what about the risk? Critics will always point to the crazy price swings. And you know what? They're right. It's going to be a bumpy ride. But this quote really puts it all in perspective. On its historic run-up, Bitcoin had three absolutely gut-wrenching drops of over 75%. So history shows us that supercycles in this space can survive these insane corrections. So if there's one key takeaway here, it's that this isn't about one single bullish signal. The whole thesis is built on the powerful convergence of three separate powerful forces that are all coming together to form this foundation.
In this slide really nails the entire argument. It's a trifecta. You have the fundamental tech leap with the Fusaka upgrade. You have the supportive financial tailwind from the Fed. And you have that relentless corporate buying that's just squeezing the supply. That right there, that's the core of the whole thesis.
You know, for anyone who's been watching these market cycles for a while, this kind of period can feel really familiar. The price is flat, kind of boring. But underneath the surface, the network fundamentals are getting stronger and stronger, and you know these big institutions are quietly buying. The source material describes it perfectly as the tense, quiet moment of accumulation right before the dam break.
And that really brings us to the final provocative question. Tom Lee's entire supercycle thesis, the tech, the money, the corporate buying, it all hinges on timing. So the real question we have to ask ourselves is, are we in that quiet moment right now?